guys, welcome back. I think I mentioned this in the last video, but I'm pretty excited. We've got a new deal, and just to refresh your memory, we walk through all of this documentation, showing the new deal, talking about the credit rating. So it's a AA credit rated tenant, and ultimately we're showing that our underwritten numbers are $159,075 of net operating income. That's net operating income, because it's actually a triple net lease. This is what the tenant's paying, but we're underwriting vacancy, we're underwriting expenses, and then we have NOI. That is a 7.58 net cap rate after we actually throw in the management costs, some of the fees that will be charged by accountants, and also taking reserves for the property. What we're going to do is we're going to build up our reserves by actually charging the vacancy and the reserves, and we're going to be putting that towards the future tenant improvement, leasing commissions, and CapEx on the property. But I'm extremely excited about this. But before we do anything, I also wanted to go through what cash on cash looks like on this, because we've got some debt quotes back and they are looking extremely favorable. So I wanted to walk through this here with you. Again, we've got the new deal. We've got the purchase price, we'll go through it, $2.1 million. The debt that we're assuming right now is 75%. It's $1,575,000, and we've got that quote from a number of lenders already. And why they're willing to do it is because it's a credit triple net deal. So we've got a credit tenant, and they are paying triple net rents, and so they are comfortable doing 75% leverage without any issues. We are assuming that we have closing costs in here, but the equity that we're going to raise plus the closing costs is around $650,000. As we said on the last page, we have net operating income of $159,075, 7.58 net cap rate. Our debt service, which we will talk about here, is $97,170 per year. How do we get that number? Well, here are the loan assumptions. If you have debt of $1,575,000, we are getting interest rate quotes of 3.75%. Our amortization is 25 years. So on a lot of multifamily deals, you get 30-year amortizations. And while that may lower your overall debt service costs, it also means on a 25-year amortization, we're going to be paying down the debt faster, which will also increase your net worth, but from a different angle. This is from debt repayment. So we're going to be getting a 25-year amortization. Using those numbers, our debt service is $97,170 per year. If we subtract these debt costs from the NOI, the net operating income, we get cash flow after debt of $61,905 per year. Now this is where things get interesting. We are calculating that on a triple net deal with a credit rated tenant that we are going to be getting a 9.52% cash on cash return. And how do we calculate this? If you remember from one of the other videos on cash, it is $61,905 divided by the equity put in, which is $650,000. You can double check me on that, but we have a 9.52 estimated cash on cash return, which is very, very exciting for a triple net deal with a credit rated tenant. So I am extremely excited about this deal, but I wanted to walk through this from an educational standpoint so that you can also do the math on what we do here, going through the analysis of what things look like to get to our NOI, and then what the cash flow after debt looks like after doing these calculations, and then what our ultimate cash on cash return is. So these are some of the steps that you need when we're walking through. But again, I'm extremely excited about this opportunity. I'm really happy to be getting into contract on a property. I've only invested in a few deals during the pandemic, and this one I believe is going to be a great deal. So on that note, thanks for joining us on this video. I hope you like it. Feel free to subscribe, like, share it, and if you know anybody who could have interest, feel free to let me know. We're not raising a lot of money on this one, so we are going to have our current investors take a look at this deal first, as well as some of our extended group. But if you do have someone who's a strong interest or a candidate who may be interested in talking with us, learning more about what we do, then I would be happy to have the conversation and see if there isn't a way to help these folks in the future from a financing standpoint. And also from an investment standpoint. So feel free to reach out. And as always, until next time, let's continue growing our passive cash flow and net worth together. Thanks so much.